Today's hearing, as many have been in the past, is in a hybrid format. Excuse me. Our witnesses are in person. Thank you for joining us, and members have the option to appear either in person or virtually. Financial fraud and schemes have, as we know, always been with us. In fact, they're older than money itself. Criminals have always found inventive ways to cheat people out of money that they've earned. Crypto is no different. Scams that have persisted in the securities market can easily be translated to crypto assets. They may seem even more enticing to potential victims when wrapped in a new technology and with the promise of quick and outsized returns. In the early years of Bitcoin, scammers hacked exchanges to steal from early adopters. It didn't take long for crypto fraudsters to figure out Bitcoin can be used for old-time schemes and frauds like Ponzi schemes and bogus investments, promising big returns with only upside and no risk. Back in March, this committee looked at how cryptocurrencies could be used in illicit finance like terrorism and human trafficking. Today's hearing considers how the increasing presence of fraud and speculation in the crypto and securities markets threaten savers and investors. In the last 2 months, we've witnessed spectacular blowups in the crypto markets, exposing both the alarming interconnectedness and the enormous risks among crypto firms. Consumers and investors were misled with promises that their crypto would earn double-digit interest rates in perpetuity. Think back to multi-million-dollar Super Bowl ads and think about whom they were targeting. One collapse after another revealed how quickly supposedly stable investments could fall apart. We saw that unregulated and unlicensed entities could both borrow and lend hundreds of millions of dollars to engage in risky crypto trading. Our witnesses are all too familiar with fraud and risks in the growing crypto markets. They've been on the front lines in the security markets, chasing bad actors, exposing frauds, educating investors and investment firms. While the work of state securities regulators and FINRA is always important, it's especially critical during periods of market volatility and economic uncertainty. Those are the times when diligent savers see their retirement accounts decline and offers of supposed guaranteed profits or, quote, no-risk investments sound even more tempting. Crypto's appeal is surely understandable. Promises of double-digit interest and lies about FDIC insurance or SIPC protection entice Americans frightened by volatile markets and worry about retirement or bills that are piling up. Times of crisis also create opportunity for those looking to exploit economic anxiety. In the early days of the pandemic, all of our financial watchdogs began issuing warnings about COVID-19 related scams, from frauds connected to investments tied to vaccines to sales of useless PPE. Fraudsters used our fears to steal and to cheat. And our witnesses are perhaps more aware of that than anybody in the room. Our witnesses today will discuss scams and frauds that target vulnerable groups or close-knit communities where trust and pre-existing relationships can be abused. This is another area financial watchdogs know all too well. Seniors and other vulnerable Americans are too often the victims of scam artists peddling Ponzi schemes or using high-pressure tactics to get victims to part with their money right away. This committee's seen the predatory behavior that targets service members looking for affordable short-term credit who are instead sold high-cost payday loans. Bad actors touting supposedly safe investments use similar predatory methods to defraud military families. And we know these frauds, these examples are often underreported. Victims blame themselves or don't want to admit what happened. We have to fix that, and Ms. Walsh will talk about that today. Thank you for that. American markets are the envy of the world. Our diverse economy and the rule of law help families and workers save for the future. We have to keep it that way. That's why law enforcement and our regulators, like our witnesses today, must be alert. They must be able to identify scams and move quickly to punish bad actors. Just last week, the FBI issued a warning for financial institutions about cyber criminals creating fraudulent cryptocurrency investment apps. Agents found hundreds of victims who collectively lost tens of millions of dollars. And we knew that's just the beginning. There are victims and more losses every day. My colleagues across the aisle seem a bit confused about where our priorities should lie. Our markets are the envy of the world because of, not in spite of, the ways we protect Americans' money. supposed innovation and opportunity don't mean much if they come at the cost of massive fraud. New ways to cheat people out of their money is not the kind of innovation most people want in our economy. We hear industry players call for rules of the road when a big fraud's uncovered and after a big actor has knowingly violated the law. The rules are there, the roadmap is clear. This committee needs to make sure our regulators enforce the law and protect the workers and families that keep this economy going and markets running. As this committee and the American people learn more about crypto-based investments and understand how scams and frauds are growing, we will push our regulators to do more. Of course, that means the SEC. It also means the banking regulators. Industry shouldn't be allowed to write the rules that they want to play by. Senator Toomey.